Alright, folks, welcome to CRT Unlocked. Welcome to the best decision you've made this quarter. Now, the fact that you joined the group doesn't mean you're guaranteed success. A lot of you will still fail. Right? That's just the reality of the game. Now, the trick is you're going to try and beat the numbers, right? You're going to try and beat the numbers, which is 95% of traders lose. Right? So you're going to have to pay attention to every single word I say in this teaching. And if you do so, if you diligently, religiously, genuinely listen, you'll make it. Right? It's a two-way street. Excuse me. It's a two-way street, right? I give you the information, and you have to go and give time to the charts with the information I give you, right? You have to go through the process of being a yearner to a learner to an earner, right? Because by the end of watching these videos, I'll have done my part, right? If you don't do your part, then it's over. You will see no progress, and you'll probably hop onto another strategy and keep sucking. Right? So don't do that. Follow the path and give time to the charts, and pay attention to section 2 and 3. Genuinely try and understand what I'm saying, right? If you don't get it from the first time, then it's okay to watch it once, twice. No one's watching you. No one's seeing you. This is a journey between you and yourself on becoming a better trader, right? No one knows, only you. Right? So watch it. If you need to watch it 10 times, then do it. Right? I've had many students who come to me who say, the first time it didn't make sense, but as I kept watching it more times, the pieces kept getting, the pieces of the puzzle getting clearer and clearer until eventually it made sense and it clicked. Right? So that's the purpose of section 1A. Forget everything you learned before this, except if it's something from me or ICT. Unfollow, and this is crucial, unfollow everyone on social media. There's not a single person on all social media, Twitter, Telegram, whatever, who's worth following besides me, ICT, and Dante, right? And if you follow me and ignore even ICT and Dante, then that's better, right? So unfollow everyone. Except me. Now, it does sound like it's a narcissistic egomaniac, but it's the truth. You need to control your attention, right? You have to focus on one thing. The more mentors you have, the more likely you suck, right? So focus on all. Focus on nobody except me. One mentor only. Avoid multiple sources of information. And 3 is take notes diligently of whatever I say, right? There's a saying in Arabic about notes, about writing in general. It says, العلم صيد والكتابة قيد قيد صيودك بالحبال الواثقة, which means knowledge is a prey. Knowledge is a prey, and writing are the ropes. tie your prey with thick ropes, right? And that concludes rewiring your brain. And once you do this, all of these, especially number 2, don't be lazy, don't procrastinate, just get it done, and let's move on, right? And number 4, of course, is consume as much technical content you can from me as you can, right? Whether it's private or public content. Make sure to consume everything. Ignore the shit posts, ignore the fun back and forth in social media. Focus on the technicals, right? Be ultra focused on consuming all technical knowledge I've ever produced online. Because it's gonna fast forward you years and years and save you years of trouble, right? It's a shortcut. And with that, I conclude section 1A. Good luck, good trading, and see you in the next one. All right, folks, welcome to section 1B. What is CRT? CRT was an epiphany I had a while back. Right? Now, the story is, as you might know, is I started off as an ICT student, right? And before that, I actually started off as a student of the charts. So I've studied supply and demand, I've studied Elliott waves, classical price action, Gann, Wyckoff. I've studied stuff you probably haven't even heard of. Right? I've dug really deep into the knowledge that's out there. And then I stumbled across ICT, right? And what I saw was that he had gathered everything else and refined it and summarized it and gathered it in one place and called it ICT, right? So for that, he does get the credit, right? He is the greatest market historian of the modern century. But the fault is the long rants, which I admit I may be slightly similar to in that aspect, but a lot better, right? It's a lot less worse than what he does. So what I did was I took all of ICT's material and I did what he did to the technicals before him, right? And the conclusion was CRT and turtle soup. Now, it is extremely unlikely that this happens ever again. So I'm pretty sure that technical analysis has peaked. Right? The peak is here with CRT. Nobody has anything else to teach after this. Right? With the stuff me and ICT have put out, there is nothing left to be taught. Stop looking, and there goes the neighbor again. Stop looking for a holy grail. And I'm not sure how this is going to sound after it's recorded. Let's see. I know this one's going to get a lot of complaints, but those complaining, you simply have to deal with it and weed out the information. Skip forward this part when you watch it later. Now, what is CRT? CRT is the most modern, the most complete form of technical analysis. It stands for candle range theory. Which means every single candle you see is a range, right? And this range can either be broken out of and continue downwards, right? Close below. Or it can be turtle souped, then it rallies, right? Or vice versa, if it wicks above, right? That's the summary. The summary is that every single candle is a range, and using the current range and the previous range, you will try and predict the next range. That's it. Right? That's the easy way. To lay foundation. Right? Now, CRT is based on the idea that there's going to be one accumulation candle, one manipulation candle, and then a distribution candle, right? So it is a 3-candle model, and this I presented it in 2023, early 2023, in a previous private teaching I had, right? As the 3-candle model, but that was introduction. That wasn't everything. So CRT is 3 candles. Candle 1, candle 2, candle 3. Candle 1, accumulation. You don't touch this as a beginner. You don't touch this as a beginner. You trade this one onwards. And this is the revolution of CRT. Before CRT, nobody was showing the higher time frame specific candles as trades, right? And anyone who claims they were is lying and full of shit, right? Excuse my language. That's the truth, right? Anyone, it's become common to see this drawing of 3 candles, right? Higher time frame candles being used as trades, focusing on candles instead of zones. That happened after CRT, right? It was never the norm. The norm was, before I joined social media, the norm was, and you might be a victim to this, is trying to trade every market structure shift on the 1 minute, right? But this is wrong. This is bullshit. Right? What you're trying to do is trade the range of each candle. Not all the candles, right? That's another common mistake, which is the beginner tries to trade every single candle he can trade, right? That's wrong. If you do that, you will simply burn out and you won't trade anymore, right? So for those watching, you are going to be one of two. You're going to be a beginner, and the beginners are allowed only to trade candle number 3. The advanced may trade candle number 2, even number 1, right? But the main rule is this: beginner, candle number 3, advanced, candle number 1, right? The whole idea is to narrow down your focus from a pattern. This is not a pattern. CRT is not a pattern. And you will fall victim to this. You watching right now, you will try and force it as a pattern, and you will fail every single time. Well, you might succeed sometimes, but the times you succeed are because it's not a pattern, right? Because it's working as a logic. CRT is not a pattern. It's not a. It's you see some people, some ignoramus on Twitter, some fool who doesn't know what he's talking about, might talk about it as an inside bar, right? Which is completely just, it shows lack of understanding, right? It's seeing this range, right? And seeing what happens to this range. Is it going to be broken out of or turtle souped? And then trading this specific range, this candle range, CRT, this candle's range, trading its turtle soup to the 50% and target 2 later, the opposing end of the range. All right. So to summarize the whole system, to lay a strong foundation, and you better be taking notes. Right? I know some of you are not. Stop being lazy. Take notes, because you're gonna need to watch this at least 3 times to make the most of it. All right. So you're trying to trade the range of a specific candle, right? This could be a 1 hour range. This could be a 4 hour range. This could be a 1 day range. This could be a 1 week range. This could be a month range. You're trying to choose one candle and trade its range, right? Now the rules are as follows. Here's a candle. It's making gray. And my charts are black and gray to remove emotion from the equation, right? Because psychologically, when you see a green candle, then when you buy and you see it exploding upwards, nice green candles, then your brain links it to money and you become happy, and happiness is an emotion, and we want to eliminate all emotions from our trading, right? More on that in section 2. So, here's a candle. This is CRT, right? Candle range. Now this candle range, you mark the high, you mark the low. You're expecting a turtle soup at the low of this candle. Right here. Now as soon as you see them stabbing into this candle, right? They stab into this candle and they wick below it without closing below the candle. Then you automatically assume that they're going to go and attack in the next candle the 50% of this candle of the range, and eventually the opposing end of the range. All right? All right, remember, 3 candles, CRT low, a turtle soup, and then 50% and the opposing end of the range, right?
And an important point is, so you avoid pattern trading this, it's not a pattern, it is liquidity pools, right? So what's happening here is, in this candle right here, what happened is that this created two liquidity pools, buy side over here and sell side. So sellers are waiting below here to sell the continuation, the breakout, right? And buyers are above here waiting to buy the breakout, right? With old sellers, of course, having their stop loss here and buyers having stop loss here. So what the market maker is going to do is he's going to push he's going to push price, usually with an inside bar as well, right? So it's chop, 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 and then it's going to be pushed into one side of this liquidity pool, this candle, right? Sell side and buy side. So when the market maker pushes price below this liquidity pool, then the sellers are triggered. Everyone's selling down here. And if you have a minimum amount of experience in the markets, then you've experienced this, right? Selling when it goes down, which is wrong. So the sellers are buying down here, selling down here. Buyers have been stopped out, early buyers, and then it suckers them in, uses them as fuel, and rallies. Once you see this rejection, once you see this price stabbing into an old low, rejecting and rallying, then you automatically assume that it's going to go and attack the 50% of the range as a safe target one. Now, you can trade the low to the 50% or the high to the 50%, and that can be your career. That can be your career, right? I have a lot of students who that's all they do. All they do is trade one side of the range to the 50%, and that's it. They're done, right? And the win rate that way is a lot higher. All right, so CRT low, CRT high. It's a generation of liquidity, right? It's a range. You wait for one side to be taken, then it goes straight to the other sides, right? So it's, now replay what I said in the past 5 minutes and compare that to the inside bar narrative, right? Just to see how ridiculous that is. Right? It's a logic, it's a system. It's a whole system. It is how the market moves. It's not a pattern. So that concludes section 1B, what is CRT? And see you in the next one. All right, folks, welcome to section 1C, types of CRT. Now, before starting, I'm going to point out the types of CRT traders. All right. Number one is a pattern trader who's looking to trade every single pattern he sees. And these are the ones destined to fail, because sometimes it's going to go up against you. The second type are those who trade the logic of CRT. Right? And this is the correct way. Amongst you as well, those who've joined CRT Unlocked, you won't all make it. And this is the harsh reality. Some of you will make it. Some of you will understand the logic. Some of you will understand what's actually meant by CRT. Others will end up being pattern traders and lose, and eventually you'll hop to another strategy. And that's why you are part of the 90% who always lose and will always lose. All right? So, moving on, we have the types of CRT. We have 5 types. Type 1, the classic CRT. Right, so it's a candle, CRT low, CRT high. You got a turtle soup at the CRT high, and trades all the way down to the CRT low and candle number 3. All right, so you have the 3 candle model. This is the classic CRT model. Bread and butter, easy to trade, gorgeous. All right, Monday, Tuesday, Wednesday. Second of all, you have what I called the pattern trader's kryptonite. Right? When pattern traders see this, then their IQ cannot fathom their double-digit room temperature in Celsius. IQ cannot fathom the fact that the pattern didn't work. All right, so there's a candle. And then you have the next candle is going to go and take both the high and the low. Right? And this indicates volatility. So candle 1, there's always candle 1. This is fixed. Right? What happened in candle 2 onwards is what's different. Right? So candle 2 is the manipulation and distribution candle. That's type 2. Now type number 3 is here's a candle. And then it takes multiple candles. So candle 1, candle 2, and then it takes multiple candles to reach the CRT low again. So while the pattern traders are waiting for candle 3 to reach, the astute pupil understands that there's types. So he goes 2, 3, 4, 5. Right? Then you have type 4, which is CRT plus an inside candle. Right? Candle 1. Candle 2 is inside candle, and again, the pattern traders get confused. But then what happens is the inside candle is going to be followed by a volatile candle, because as you know, candle size matters, right? So size does matter after all in candles and so candle 1, inside candle, and after the inside candle directly, there's a manipulation candle, which is expected to produce a violent distribution down to the opposing end of candle 1. All right, so this is type 4. And then you have type 5. Which is candle 1, followed by multiple inside candles. Right? Everyone's bored, no one's trading. And then suddenly there's a volatile turtle soup in one side. And then it trades down to the target. Right? There were some ugly candles. But you get the point. Right? CRT high, CRT low. Right? Candle 1, 2, 3, 4, 5, and so on. Right? And these are important facts. Why? Because this helps you understand that it's not a pattern, It's a logic. Excuse me. Right? And that concludes the chapter of the types of CRT. Next up, the more dense chapters will be the secrets of each of the three candles, and ICT and CRT. I wish you good luck, good trading, ponder over this lesson, and see you in section 1D. Alright folks, welcome to section 1D. Secrets of the three candles. Right, so each one of the three candles, what happens in it? Now, based on the previous lesson, you should be aware by now that it's not the three candles, it's the manipulation candle onwards. That's candle number 2. All right? So, in summary, this is the rough summary of everything. All right? You're trying to trade the range, and before continuing further, we need to understand that every single candle is a range. So you don't wonder, anyone who's not a student of CRT or Turtle Soup is trading random patterns without thinking, right? They're just trying to catch a move without knowing what's actually happening. If you are a CRT trader, then you're looking to trade a specific range of a candle, right? Open, low, high, and close. All right, this is a candle. This could be a 1 month candle, right? Week 1, week 2, week 3, week 4. It could be a 1 week candle. Monday, Tuesday, Wednesday, Thursday, Friday. It could be a daily candle, right? 159, 159. It could be a 4-hour candle, right? 9, 10, 11, 12. It could be a 1-hour candle, right? 15 minutes each. It could be a 15-minute candle. This range you're seeing in front of you, go into your chart right now, and you'll see this exact same thing happening on all time frames, right? That is the fractal nature of price and time. That's why this is the most objective way of trading, is trading specific ranges of specific candles, right? Not the pattern. The pattern is part, yes, the pattern does matter somewhat. It matters only in the context of what I said before, is getting familiar to the lower time frame price action at the higher time frame key level, right? So all you're trying to do is try and guess what's the range going to be. First of all, decide, because most people don't know what they're trading, right? They don't know what kind of range they're trading. So decide, I'm going to trade the 4-hour range this week, 1 4-hour range this week. For example, a 9 o'clock candle, right, in Forex. I'm going to trade the EU 9 o'clock candle on Wednesday. That's usually a fast candle, right? I'm going to wait for, I'm bullish, so I'm going to wait for it to open, to smack down to a key level, and rally up, right? So this is the summary of it all. This is a summary. Now, to further get into, if you stop this entire course right now. If you stop watching right now and walk away with this, then you've made it, right? Then I've given you the information you need. However, you're going to keep watching because you want to know more, and you're going to go into the details of each specific candle, right? So the 3-candle model, CRT, candle number 1, candle number 2, and candle number 3, right? Each of these, the pattern says this, but if you look beyond the pattern, each of these candles is a range. And go back and check for yourself. Look for a successful 3-candle model, CRT, right? CRT low, CRT high. Look for that and see what do you see inside. You'll see something like this. You'll see a candle. You'll see the next candle going. And then you'll see the final candle hitting the target, right? Candle 1, candle 2, candle 3. This and this are the same thing, right? Understand that. All right, so the objective is to trade candle number 3. That's all you're looking for. So you're looking for the manipulation to happen over here. For the market profile to change from bearish to bullish. And then the fastest, easiest candle is candle number 3. You simply, if you're bullish, buy below the open, it rallies, and that's it, you're done. Right? Now the intricacies of each candle are as follows. Now here's a dissection of each of the 3 candles. All right, so candle 1, candle 2, candle 3. Your model is waiting for candle 1 to be turtle souped, and then trading either candle 2 or candle 3. All right? That's the model. If it doesn't happen, you have no trade. There are some ways to narrow down this. For example, candle 1 is Monday. As you know, the week is divided into Monday candle, Tuesday, Wednesday, Thursday, Friday. So in one of these, this is the weekly candle, right? And this is where time comes in play. And this is why time is more important than price. All right, this is the weekly candle. This is one weekly candle, which is 5 daily candles, all right? One week, 5 daily candles, all right? You're looking to find a CRT within these 5 daily candles, right? It could be Monday, Tuesday, Wednesday. Usually, the best one is the Monday model, right? You have Monday, Tuesday, Wednesday, and that's CRT for you, right? Monday, Tuesday, Wednesday. So you're looking to trade only 2 of the weekly candles. That's enough. if you are a weekly range trader, right? You're going to trade the range of one or two of the daily candles, usually Tuesday and Wednesday, right? Because Tuesday and Wednesday are the two candles with the highest probabilities, right? Now the daily candle is divided in two. 6 4-hour candles, right? The beauty of this is I don't have to change much because of the fractal nature of price, right? So the same exact drawing, right? This is a 1-day candle right here, daily candle, which is basically 6 4-hour candles, right? 159, 159. All you want to do is trade two to three of the 4-hour candle ranges, right? With special focus being on the 1 and 9 candles, right? Because those are usually the manipulation and distribution candles, right? 1, 5, 9. Trading the 9 AM 4-hour candle alone is a model which is going to feed you every single day, right? And that's a model which is very dear to my heart, which I'll be sharing in the group chat of CRT Unlocked, right? So you're not looking to trade everything. The common mistake is you try and trade every single candle you see. No, try and trade only the manipulation candle if you are advanced, or wait for it to happen, right? Simply wait for the manipulation to happen and wait for the next candle number 3, right? The easy candle, remember? 159, 159. Time is an important element. Because without time, you're simply pattern trading, right? You need to bear in mind that if you're trading the weekly candle, bear in mind each of the daily candles: Monday, Tuesday, Wednesday, Thursday, Friday. If you're trading the daily candle, bear in mind 159, 159, and always keep in mind where you are relative to this framework, right? Of course, there's the 4-hour, right? And its divisions, but the focus I'm going to draw your attention to is to the daily and weekly, because these are the smoothest, most clear setups you'll find. Right? Now within each candle, candle number 2 is the candle which will have the turtle soup, right? This, the most advanced entry model, right? And then of course it's going to have an order block, and then you're going to have candle number 3 smacking into a PD array in candle number 2 and rallying, right? And the market structure shift and OTE works within the framework of the candles. Now, because candle number 3 is primed to go up, that's the only reason the bullish OTE is working, right? It's not working because it's an OTE. The pattern is not working because it's a pattern. The pattern is working, the bullish pattern works because price was going up anyway. Right? Write that down. And the bearish pattern will only work if price was going down anyway. Right? How to determine where price is going? The good old if-then principle, right? So wick above, next candle, lower prices. Wick below, higher prices. Close above, higher prices. Close below, lower prices. Right? And I'll add in CRT Unlocked, inside candles equals volatility in the next candles. All right? That's how you determine what's going to happen next based on the candle shape and size. Now, within this framework, you're going to use candle number 1 only as a target, nothing else, right? Targeting first the 50% of candle number 1 and the opposing end of candle number 1, right? And this is where we get into another topic, which is CRT and MMXM. Now, CRT it's an objective way to visualize the market maker models. Now, as we know, the market maker models are simply stolen from Wyckoff, right? If you go back and look at Wyckoff schematics, you'll see plenty of market maker models. And CRT is a better way to visualize market maker models. Right? Of course, this being the smart money reversal, turtle soup, key level, and there you go. With, of course, the previous candle's high being the original consolidation, right? Again, I urge you to not look at the pattern. It doesn't matter. I don't care about the pattern. All I care about is one of these ranges. I'm going to trade one of these ranges, right? Turtle soup, key level, structure shift in the second candle, OTE, and kiss of death in the last candle, right? Equal highs, original consolidation is going to be up here, right? So look to trade, in summary, look to trade the OTE or the kiss of death in candle number 3, right? Buy below the open of candle number 3 when bullish, right? As you know, the candle is formed by the open. A bullish candle has the open, low, high, and close. Bearish candle has the open, high, low, and close, right? It's a bearish candle, it's a bullish candle, bearish candle, bullish candle. All right, these three are the same thing. Let's make it a bit, I'm a doctor, but you know, let's make it a bit more artistic. Right? You're trying to trade this. You are not trying to trade the pattern. Do you see how different this is? Trying to sell in here trying to buy in here, as opposed to inside bar strategy, bro. Nope, that's wrong. If anyone says, or if you see anyone on social media saying that CRT is an inside bar strategy, you simply disqualify them instantly from any opinion. Right, that's just ignorance. So you're trying to trade candle number 2 onwards, ideally candle number 3. When bullish, buy below the open. When bearish, sell above the open of candle number 3. After you see candle number 2 manipulating and targeting the 50% of candle number 1 and the opposing end of the range. All right? Same over here. Buy below the open of 3 only after you see a strong rejection and manipulation of candle number 2, targeting 50% and candle number and the high of candle number 1, right? CRT high, CRT low, and vice versa. Right? Again, this could be a 159, right? Trading the daily range, and this is nothing more than a 159. You're looking to trade, remember? $159, Monday, Tuesday, Wednesday. Right? That's how you choose the CRT candle, right? But by not being a pattern trader. Now that was a brain full of information. I'll let you digest it. And one last touch in this topic is that the SMT, the main SMT is going to happen between candle 2 and candle 1. Right? And this is the reason why it's going to be left untapped. For example, let's use Bitcoin as an example. Bitcoin candle 2 is stabbing into the low of candle 1. Right? As we know, Bitcoin and Ethereum are correlated assets. Right? And Ethereum, on the other hand, candle number 2 is refusing to push it below the low of candle number 1. Does this mean you keep forcing it to go down there? Nope. What you do is you keep in mind that it may go down, but it's unlikely due to the fact that Bitcoin has already taken the low, right? If one asset takes the low and the other one doesn't, that indicates strength in Ethereum. This is the Dow divergence, right? The SMT divergence, which is rebranded by ICT, originally introduced by Charles Dow, right? If one asset refuses to take a low, the other takes a low, and the stronger asset, because they're refusing to offer the lower price on this asset. Again, not a pattern, logic, right? They're refusing to offer this low price over here, which means they're buying it up. Smart money is buying as much as they can. They're forcing price to remain above, and a rally is expected. This is when you can expect candle number 3 to attack the targets without taking the previous candle's low. This is the SMT CRT. Right? This is when to leave the low untouched. It's also crucial. Right? And with that brain full of information, I wish you good luck, good trading, and see you in section 1E. Alright folks, welcome to section 1E. ICT
and CRT. Now, before starting, I'd like to point out the alignment timeframes for CRT. Now, as you know, in CRT, one of the key factors is finding the entry. And there's mainly 3 different entries you're looking for. All right, so you have 3 candles. Right. Okay, so with bullish CRT. You're looking for, number 1, you're looking for a Model 1 entry inside here, right? As you know by now, as you should know, candles are ranges, right? So you're looking to trade each range. So you have range 1, then you have range 2, candle number 2, and then you have candle number 3, right? Over here, of course, key level. Now, the entries are as follows. Model number 1 inside of this candle. What's that? That's, you have a high, and then you have a turtle soup, and the thick up close candle that's stabbed into the old high is your entry. Right? As soon as you close below it, then you're good to go. Right? Entry over here. Stop loss above the candle, and target the lows one by one. Right? That's the first model, and vice versa in the bullish scenario. Low, thick, down close candle used to manipulate price below the old low, close above, and you got the entry. Right? The next entry is an OTE in the third candle. All right, so you're going to look, this is an OTE. So the candle is manipulated. You have candle number 1, you have turtle soup, and now a CRT pattern trader, and this is important, is going to blindly try and buy ASAP. So you'll try and buy over here. It's going to dig deeper, OTE, and then rally. Then you get stopped out. Right? This happens for 2 reasons. Number 1, to scare away early buyers. Number 2, to fill the wick. As I've said before, if there's a long wick in a candle, then expect at least 50% to be retraced to. And in the 50% of that wick, you'll see a breaker, OTE, or an order block. Right, model number 1. All right? And of course, the final one is my favorite, the kiss of the turtle soup before the target. Right, so before this high is hit, there's always going to be in this candle, right? If you zoom in this candle, there's going to be one final turtle soup, and the target is met. Right? This is the easiest. This is like it's like taking candy from a baby. Right? So those are the 3 entries you have. You have model number 1 and candle number 2. and you have a breaker / OTE candle number 2 or 3, usually 3, and you have the Kiss of Death turtle soup in candle number 3. This is my favorite, right? And I'm looking forward to seeing many of you using this one. Right? Now, as to the relationship of CRT and ICT, CRT is a concept heavily based on ICT. But it also has to be said that it is a refinement and improvement of ICT. CRT is the best way to determine the draw liquidity. That's why you see many of these ICT traders will start using it the way I do, right? So first, 50%, important, super important. Now, if you trade the CRT low to the 50% your entire life, then that is a career you can make in trading. Trading just this, just ignoring everything else. Previous candle, candle 1, Monday, 1 a.m., whatever, right? You pick 4-hour candle, daily candle, weekly candle, manipulate it, and then the next candle you trade up until the 50% of the previous candle, and you're out. You bounce, and you look for the next trade. Right? This is a model which has an extremely high win rate, and it's enough to build an entire trading career. Right? It's the 50% model. It happens every day, and every single week, all time frames. You're looking to catch one of these on the 4 time frame every week, and you're good. Right? So, first of all, CRT is the most accurate way to determine draw liquidity. It's the most accurate way to determine where the price is heading to next. It gives a meaning to time through 159. 159. This is the daily candle division in 4 hours, right? One daily candle. You'll see 159, 159, right? Spoken of this before. In SOT, shadowed SOT, and it gives a meaning to MMXM, right? It's an entire system by itself. It gives a logical meaning to market maker model. So instead of marking random original consolidations, right? Any random consolidation you see, you're going to see, is this a previous candle's high, CRT high, or not? If not, then it doesn't matter. You look for another original consolidation, quote unquote, which is simply a previous candle's high or low, right? So this is how CRT is an improvement to all ICT concepts. And again, the basis of all of CRT and ICT trading, right, is simply trying to catch the range of one candle, right? That's all that's ever happening. Don't forget, it's open, key level, when you're bullish, and rally, open, key level, and dump when you're bearish, and that's it. This is all we're doing. If you take this away from the entire course, then I'm good. Right? I've done my job. Though there's a lot more, but if you're being lazy, then this is all you need. Right? When you're bullish, key level, rally. When you're bearish, key level, dump. But how do I know if we're bullish? Because I told you, wick above lower prices, wick below higher prices, and so on. Right? And that's how you determine where price is going next. wick above. Next candle probably going to go lower. Wick below, vice versa. Close above higher prices. Close below, vice versa. Volatility inside candle means there's a violent price move coming. Right? Now it comes to the time frame alignment of CRT. Let's start from the monthly and go down all the way to the 4 hour, right? So we start at the monthly. So a monthly candle, monthly CRT, you're gonna look to go down to the daily or the 4 hour model 1, right? Remember the entries? Model 1, breaker, and OTE, anchors of death. For the monthly candle, you're gonna try and go down to the 4 hour. Look for model 1 over there, right? The 1 week, you're gonna look down into the 15-minute model number 1. The daily candle, you're gonna look into a 5-minute model number 1, right? Now, time frame alignment, as I've said before, is not a fixed concept because every time frame is printing at its own pace. So there is no fixed time frame alignment. These are rough estimations. You can also have this as the 1 hour, for example. This is the daily. This has a 15-minute, right? It's up to you. But this is the closest approximation of what it's like, right? 4 hour, 5-minute, 12-minute. So if you're trying to trade the range of this candle, right? Trading the monthly candle range, then pay attention to the 4 hour time frame. Your pattern is going to form in this time frame, right? So this is the range you're trading, and this is the pattern or entry model, quote unquote. And I say pattern lightly on this time frame, right? But the easiest way, assuming you are at least a semi-beginner, intermediate ICT student, the best way to know where price is going next is CRT, right? And that concludes the lesson ICT and CRT. I'm not going to dedicate this one to teach ICT. I've done that before. I've summarized the entirety of ICT before, right? If you remember. CRT Unlocked, the technicals were designed to be very brief, to the point, with more practice coming in the group chat and the PDFs. Right? But the base, the foundation is laid over here. The entire foundation of CRT is laid over here. Now you build on this, right? And to reply to the question I get a lot of times, now that I've exposed CRT, is it going to stop working? No, it's not. Relax. Don't get nervous. It won't stop working at least until the year 2030. After that, we'll see. If there's a signal that it's going to last longer, I'll let you know. Right? And with that, I conclude this lesson. Good luck, good trading, and see you in the next section. All right, folks, welcome to section 2 of CRT Unlocked. How to never lose a
again. Now this section is divided into three main parts. A, what is trading? B, why most traders will always lose? C, the importance of journaling. Alright, so we start with 2A. What is trading? Now, contrary to what's perpetrated on social media, the glamorous lifestyle of the Lambos and the Rolexes and the millions of dollars per trade, what trading is very different from what you see on social media. Now, if you reach the upper level of trading, right, if you become the top 10, top 5% traders in the world, then yes, it is an extremely rewarding profession, which will yield and provide you with, which can provide you with an extremely luxurious lifestyle if you so wish, obviously. But for most traders, that's not the case. Trading is not a casino. It's not a gambling site, right? It's not a get-rich-quick scheme. Get-rich-quick, nope. It is a profession, right? Just like being an engineer is a profession, being a lawyer is a profession, being a doctor is a profession. Trading is a profession, right? And the sooner you treat it as a profession, the sooner you will find rapid success, right? If all you do all year long is depositing money into an MT4 account, right, sending the broker your hard-earned cash just to gamble it away all year long, changing nothing, then you're not a trader, you are a gambler, right? There's a fine line between a gambler and a professional trader. So trading is a profession. Trading is a profession. The purpose of trading as a profession is to get a return on investment higher than you get in other places. And when I say the word ROI, when I say return on investment, and that means I'm assuming that you have some capital to start with, right? Those of you who are lucky to inherit or have saved their whole lives, you are more likely to succeed at trading than someone who has nothing. Right? That's a sad truth. And this is a common problem, which is you don't suck at trading. You simply don't have enough capital. All right? Because if you had $1 million, for example, of trading capital, and it's advised to never trade with more than 10% of your entire net worth, right? With 10% of that being the stop loss, so 1%. Right? So if you had $1 million trading capital, then it's much easier to make, let's say, 100,000 per month, 10%. A nice round number, conservative number I like to use is 6% per month. Right? If you can achieve 6% per month, every month for 1 year, then you are out trading most hedge funds, most quote-unquote institutional traders, right? If you can achieve only this, and I know you think it's silly, but I can guarantee that none of you, right, most of you, have never done this. And if you have, then you're either lying or you're an anomaly, right? Because there's a famous quote in trading, which is, "I'll give you $1,000 to trade, right? And if you give me $1,000 back by the end of the year, then you are a successful trader." Highlighting the importance of preserving your capital, right? Because the most important rule when it comes to money management, risk management, is preserving capital. Because without no capital, you cannot trade. And me personally, the word capital I like to use on amounts no less than $10,000, right? Because anything less than that is just, you can do it, but it's pointless, because the main purpose of trading is not flipping accounts, right? You see those Nigerians on social media taking $5 to 1,000, 10,000. Every single one of those is a scam and a lie, right? That's not the purpose of trading. The purpose is to use the capital you have to generate income. Like any other profession, generate income to pay the bills. If you're obsessed with the markets, and if you reach an extremely high level of precision in trading, and you achieve the peak of sound money management, then you can also go ahead and expect to see a high ROI performance in your trading, right? This is flipping. So it's possible, but it's extremely rare. And your main focus should be this to begin with, right? Because this comes second. Generating a high ROI will never come before generating a basic income, 6% per month, right? It's not going to happen. So you go through number one to eventually go to number two, all right? Section 2B. And before starting Section 2B, the summary of Section 2A, and you should be taking notes, is trading is a business and a profession, not a random gambling addiction, which most people have. Right? Now 2B is why most traders will always lose. The simple answer is because they don't correct their mistakes. And I'll be posting a PDF version of each lesson for reference and for cleaner visuals. But there is value in the rants, which I happen to do, right? It's not intentional; they just happen. But within the rants, you'll find a gem or two. Every single rant just slips, right? So you got to pay attention to everything and weed out the important stuff. Which in CRT Unlocked, I'll be gracious enough to provide PDF version of each lesson. All right, so back to why most traders always lose. Because they never correct their mistakes. Right? Because they see trading as this $100 to $1 million venture and journey which they're taking in the hopes of one day becoming rich. Now, it's a sad, boring truth, but this is not the way. Right? The way is finding a strategy. In this case, CRT and turtle soup. T in CRT stands for turtle soup and time. Turtle soup and time theory. All right? Find a strategy. Back test the strategy to see its win rate. Is it worth following? And in this case, I've done most of the heavy lifting for you. Right? So when I'm teaching the concept, you can backtest, you can check the accuracy yourself, but it's a waste of time because what I've done is I've backtested for you. I've done all the heavy lifting, and if any mentor, and I'm reminded by that DTFX clown, if any mentor insists on telling you to backtest, that's because they're not sure about their edge, right? I'm certain about my edge. I know for a fact that it gives me a 90% win rate, right? That's a fact. Therefore, I don't need to backtest anymore, right? Due to me having done the heavy lifting and due to the fact that I can't say much, but the way the strategy was developed, it was developed to be extremely high win rate, right? Because I'm trying to use the conservative words here, because if I slip up too much, then I could get in trouble. But the point is, CRT turtle soup, these two strategies are flawless, right? So as soon as you have this, you have the strategy with you, right? As soon as you choose it as a strategy, because that's what you have to, you got to find the strategy, and you have to choose the strategy, right? Find your strat, backtest it, skip this one if you're part of this group. And number 3 is apply it relentlessly and discover the strategy in your own trading, because each trader's journey it's an individual one to success, right? Some people might find success, some of you in this group, you can find success in a month, others in 3 months, others in 6, others perhaps in 12, and others will never find success. And that's not because of the market, it's because of you, because you are not fit to be a trader. And if you're that kind of person, then it's fine, right? You can't force it. Although I do believe that anyone can do this. And I'm a firm believer that it can be done. But just due to the nature of some people, they'll never make it, right? And I can help you with that. So, backtest, and then make the system, understand the system by making it yours, right? Practice makes perfect. And by practice, I mean take the strategy and get used to it so much, get used to seeing the same thing again and again and again and again and again and again, that it becomes second nature. Once you feel that it's become second nature, then you've made it. All right, until then, until until you've back tested and forward tested your balls out, your eyeballs, of course, right? Then and only then are you allowed to criticize. If you haven't forward tested your strategy 10,000 trades, then your opinion is irrelevant. Right? Forward testing while actively addressing the feedback. All right. Now, this is the ideal path of a trader. What most traders do, and what some of you in this group will do, I can help you, is you'll find a strategy. It'll be too hard. You'll skip and go to another one. And then another one. Then another one. Then another one. Then another one. Right? You are what's called a strategy hopper. Right? And strategy hoppers will never make it. I've seen it happen. I've seen traders come and go from ICT to supply and demand to DTFX to all that garbage, right? If you find ICT and if you find me and you still decide to go somewhere else, then you will never make it. I say that with confidence. Let me say that again. If you find me and you find ICT and you look elsewhere, then you will never make it. Right? Because it's the truth. This is the objective, most accurate. It may not be the most flashy, right? But it's the most accurate, the most objective, the most complete system of trading on planet Earth is this. I would say ICT, but all he does is make sure you watch as many hours as possible to pay his bills. YouTube revenue, all right? So let's say not ICT. Focus on CRT and Turtle Soup. All my content, especially the technicals, all right? And finally, in section 2, we have section 2C, the importance of journaling. Now, in every job, every profession in the world has some sort of register attached. Right? Me as a doctor, before the patient comes inside my practice, I have to make sure that he has the informed consent signed. Right? I have to make sure to write down every single patient, right? His age, his name, his date of birth, his personal details, allergies, medication he's taking, previous surgeries, operations, etc. Right? I have to do all those details. And it's a cumbersome process, but you get used to it, right? For every single patient. If I don't, then I'm risking the patient's life. Same with the lawyer, right? When a lawyer has a case, what does he do? He has to go and write down the details, every single detail of his client. Engineer, same thing. Architect, same thing. Even a cashier has to give you the receipt when he's done, right? To prove he did his job. So same goes with trading. If you're a trader, then you need to have a journal. If you don't have a journal, then you are not a trader. You are a gambling addict. Addict. Nice voice crack. So, the journal and the trader should be inseparable from one another. Right? When you see a trader, then ask him. Any trader, on Twitter, in real life, whatever, in this group, ask him, do you have a journal? If the answer is no, then he's not a reliable source of information, and he sucks. All right? Now, types of journals. A basic online note, or you can also have it as a written note, or ideally, and the best of all, is a visual record of the trade, which has the following. Before, what was the entry, stop loss, and target? During, what did you feel? After, what was the outcome and how to improve? This is the best way to journal. And it might be tiring at first, but then you get used to it and you'll see improvement. It's going to save you years and years and years and thousands of failed trades, right? Because it'll pinpoint exactly what mistake you made, right? It'll show you the mistake you made. It's literally showing you how to not make the mistake again. And this is why I call this how to never lose again. All right? Because every trade you take, it means nothing. It's simply one number within a 10,000 trades you're going to take, right? So you feel nothing. The famous post I have, which is, when I win, I feel nothing. When I lose, I feel nothing. When I'm right, I feel nothing. When I'm wrong, I feel nothing. It's only business, right? So win, journal the win in this format, and repeat. Lose, journal the loss in this format, and avoid in the future. Miss, journal in this format, and catch next time. Eventually, you correct all the mistakes. Now, assuming, of course, you're doing this under one system. For strategy hopping, this doesn't work, right? So under one system, you apply this method of journaling and this mindset. A win it's great. I'll do it again. It's me learning what more to do of. A loss is a lesson on what not to do next. Right? So when I lose, then I never repeat the same mistake again. Right? That's important. Which is once you lose in a specific way. For example, let's say you were looking for a turtle soup. You were expecting this, right? But instead what happened was this. That's a loss. All right, it's a loss. You go back and dissect it and realize the key level was down here. And the reason you got stopped out was because you didn't pay attention to the key level. That's a mistake you should never make ever again, right? Which is marking the key level before you enter the trade, right? Just an example. And this may be one of the most important pieces of videos. One of the most important piece of content I've produced, either publicly or privately, right? Is this presentation right here. And thinking in this way, right? You think as you trade. You don't think, I want to make money. You don't think, I want to buy a Lambo. I want to buy a Rolex. I want to buy a house. Nope. I want to get out of debt. You simply think, I want to lessen the amount of mistakes I make. That's all I want. Right? And that concludes section 2. There will be a PDF lesson for each lesson. In each section, in each video, it'll have both a video format and a PDF format, right? To pass the exam, you're gonna have to study both the video and the PDF, right? That concludes this teaching of how to never lose again. I wish you good luck, good trading, and see you in section 3. All right, folks, welcome to section 3, execution. The Holy Grail. It's a catchy title. Some might even say it's marketing, but it's the truth, right? This is the Holy Grail. The Holy Grail is a follow-up of journaling. What does that mean? That means that this is the Holy Grail. Once and only once you found your system, you made sure it's your system, right? You've practiced it, you've back tested it, and you've forward tested it. And I know some of you are going to complain about this being all talk and talk, but this, let's put it this way. Most people are wrong. And most people, all they do is talk about technicals and models, but that doesn't matter. This 1 hour, 1.5 hour, 2 hours of talk outside of technicals could literally be the aha moment, the light bulb moment you're looking for, right? It's inside these, not inside the technicals, right? Because there's many people who master the technicals, they're great at reading price, but they suck at execution. Which brings us to execution. Now there's two things in trading. Right before you trade, there's analysis. And analysis consists of entry, stop loss, and target. Execution is a whole different thing. So it's two different stages of trade. So you analyze the move, you expect the move to happen, you mark out the key levels, entry, stop loss, target, and then you may succeed at this, right? You may be a successful analyst, but can you capitalize on your analysis? Can you make money using your predictions? That is execution, right? Execution is the ability to make money with your predictions, right? And to improve execution, what you have to do is correcting mistakes. And execution can be summarized by the good old quote: win, journal, repeat, lose, journal, avoid, and miss, journal, catch next time. All right, and here's one example of each. So when journal repeat, let's say you marked, this is a 4-hour candle range, and before it even opens, right, let's say this is the 1 o'clock candle, you mark out a key level, you're bearish, you mark out a 1 day key level. All right, you wait for price to open, to rally into the key level, and then it breaks down. Now, the fact that you marked the key level is not enough. Are you familiar with the lower time frame price action at the key level? That's the key. Because otherwise, you'll enter, right, here's the daily key level. You'll enter over here. It'll sell. You'll be happy. And you'll move stop loss to break even. It'll go and stab into your entry again. This move right here is where most traders doubt their entire existence. But all it is a turtle soup, right? And that's where getting used to the concept comes. You need to get used to the concept before applying it. You can't just try it out once, twice, 10 times, 100 times and say, I'm done. No. You have to keep sharpening the blade again and again and again, 1,000 times, 10,000 times. Right? You have to get used to it so much that it becomes second nature. So write that down. Familiarize yourself with what does the lower time frame price action look like at the higher time frame key level. And for those who are paying attention up until now, here's a nice model for you. Let's say, for example, it's the 9 o'clock 4-hour candle, right? All you gotta do is mark a previous liquidity pool to the 9 o'clock candle and a higher time frame key level. And you're gonna wait for price to open. You're gonna wait for price to rally down into the key level, consolidate at the key level, stab into it, and there's your model. You trade it all the way to the 50, back to the opening price. All right? That's the model. If you're bullish, and you simply reverse this if you're bearish. All right? The entry is going to be at either down here at the turtle soup itself, or model number 1 down here, or the breaker / OTE right here. What's wrong with this? All right. As we know, any key level anyone marks is going to give the 3 following entries. All right. It's going to give you number 1. A turtle soup. Number 2, an order block. And number 3, it's going to give you a breaker / OTE entry. All right, this is number 3. This is number 2, order block. And right down there is the turtle soup entry. All right, so 1, 2, 3. How is this related to CRT? This is a previous candle's low. Right? That's a CRT low. But do you need to know and always be aware of the CRT low? Yes and no. Yes, because it's going to happen anyway, right? And no, because what's going to happen is sometimes you'll mark a CRT, right? You'll find a big candle you want to trade. What the hell is wrong with this? All right, that's better. You'll have a CRT candle. You'll wait for the candle to be taken in the next candle, and you'll chase it, you'll force it so much that you'll refuse to trade unless it takes it. It'll never take it, and it'll rally. And then you say, I'm a scam, and I see a scam and trading a scam, and you go and kill yourself, right? Nope. That's not how it's done. Because this could easily be an SMT on the other asset class. Then what? Right, so you have to be aware that CRT it's going to happen, but you also have to be aware of when it's likely to be left untapped. When is the previous low likely to be left untapped? It's an important question. Right. Anyway, now back to the next example, which is a losing trade. Let's say you marked a candle range you want to trade. Right, you mark the key level. Right. It's 1 a.m. Good time to trade. Here's the key level. Price opens. You're bearish, right? It rallies. It smacks into the key level. You get excited. You sell with all your power. It goes down. You're happy for a second, and then it stabs back up, stopping you out. You blow your account, and then it goes down your path to your initial target, right? And this probably happened to many of you. Now, why did this happen? This happened because you are unaware of the lower time frame price action at a higher time frame key level. Any key level is going to have three kinds of reactions, right? It's going to have a V-shape reaction, key level, or it's going to have an M shape. Most common is this one, or it's going to have multiple touches, right? Especially in ranging markets. So you want to watch out for this one. This is a common mistake, and go back in your losses. You'll see that this is a common mistake which you have made for certain. How do I know? And why I'm so confident? Because the markets are designed for this very reason. Right? They're designed to fuck you over in this exact pattern. Right? I say pattern with as a tongue-in-cheek comment. Because as you know, we're not pattern traders. We trade the logic of why price moves. Right? Next up, miss, journal, avoid next time. Catch next time. All right. Let's say you marked the candle range, let's say 9 a.m. till 1 a.m. Right, you want to trade this range. You mark the key level. Price goes up, you're bearish. It goes higher, it goes higher. It almost touches. You're waiting for this previous low to be taken because Romeo told you so, and then it just tanks. Right? This also must have happened to you. Right? Why did this happen? You would investigate. And then you discover that it's either you placed the key level too high, meaning there was purpose for price to reverse before the key level you marked, right? So the actual key level was down here, and you marked it up there, whether from lack of experience, to catch more pips, whatever. You mismarked the key level, you mislabeled it, or you didn't pay attention to SMT, because SMT is going to leave. It's SMT is responsible for the creation of equal highs and lows, right? Equal highs, they were created with SMT. And here, turtle soup pattern traders get wrecked. Right? So those are 3 examples of what can happen in a trade. Now apply this in your trading journal next week to every single trade you take. And they shouldn't be more than 5 per week, right? Maximum. Apply this and see. And I promise you, if you do this the way I'm showing you, then you will see a massive amount of improvement. Years and years of lost, wasted, gibberish, garbage, useless information you learned is going to be erased and gone within weeks, right? All you have to do is apply the rule of win, journal, repeat, lose, journal, avoid, and miss, journal, catch next time. This is execution. Execution is the emotion you live during the trade. Execution is the emotion you live when marking the key level, imagining the amount of money you're going to make. When price hits the key level, when you press the button, the sell button, and see price moving straight your way or consolidating a bit, those emotions you feel as it consolidates and then tanks or goes against you, right? All of this is part of the journey, your individual journey as a trader. This is something I can't teach. I've experienced myself. I know what it's like to be an absolute horrible trader. I know what it's like also going from being the worst trader in the world, literally, to being the best, bar none. Right? And this is part of the journey. Experiencing all this, the wins, the losses, missing the trades, dealing with them. I can guide you through it, right? And in the chat, I'll be answering questions about both analysis and execution. But bear in mind that you need to live this by yourself, and you living through many losses and wins and missed trades and correcting them, that's going to build the confidence you need in order to successfully and independently trade yourself. Right? That breeds critical thinking. Journaling breeds critical thinking. Right? You journal the trade, the key levels. You ponder and reflect over what happened, what you did, what you should have done. In some ways, it's similar to real life. Right? What you should be doing in real life. What you do in any profession, right? You ponder over the job you did, and the job you could have done, and the job you should have done, right? And with that, I conclude this section. The PDF of this lesson will have more information. I wish you good luck, good trading, and see you in the chat and the exams.